Should retirees diversify globally to protect their savings? Hi, I'm Doug Goldstein. I work with many retirees who live outside the United States who want to have U.S. brokerage and investment and IRA accounts, and we talk a lot about global diversification because retirees who diversify globally protect themselves from investing with too much home bias. If you have any questions or comments, by the way, about what we're talking about today, feel free to get in touch with me. My email address is doug@profile-financial.com. If you're saving for a future retirement, your goal is probably to grow capital. If you only focus on higher returns, though, you may take risks that you cannot afford. Markets can be volatile. Diversifying globally may be a good way to lower volatility and smooth out returns. And if you're retired, and if you've chosen to have equity exposure, stocks in your accounts, you should certainly talk to your advisor about global diversification. Investment portfolio risk can be reduced by investing in a mix of what are called non-correlated assets. When one asset is moving up while the other is moving down, this negative correlation can counterbalance risk. For instance, if your oil exchange-traded fund, ETF, has tumbled 50% because of decreasing oil prices, maybe you have a rising airline ETF to offset the loss. Airlines, after all, benefit when fuel is cheap. Adding global equities to a domestic portfolio is another example of non-correlated assets since they diversify exposure away from the domestic market. Global investments can introduce non-correlated countries, industries, companies, and currencies. A great question that people ask when they hear about this is, do global stocks truly provide diversification opportunities? Globally, equity indices are becoming increasingly more correlated, meaning their prices move in the same direction more so than they did in the past. Typically, the stock allocation of retirement portfolios is comprised of large companies which have growing exposure to the global marketplace. Today, companies on the S&P 500 gain between 40% and 50% of their revenues from the global market. The roller coaster in technology stocks reveals the risk of a non-diversified U.S. portfolio, as many U.S. stock indices have a high exposure to the FANGs, F-A-N-G-S. That's Facebook, Apple, Netflix, and Google. Global stock indices can have different sector weightings than domestic stock indices. For example, the S&P 500 has a 23% weighting in technology stocks, whereas the S&P 700 Global Index, which excludes the United States, has a 9% technology weighting. I wrote a book called The Retirement Planning Book. The book makes suggestions on how to build a diversified retirement portfolio. I'd like you to download it for free by simply going to www.profile-financial.com/RPB. That stands for Retirement Planning Book. Once again, that's www.profile-financial.com/RPB to get a free copy of the Retirement Planning Book. If you have any questions or comments, feel free to get in touch with me. My email address is doug@profile-financial.com. And don't forget, before you do any investing, make sure you read our complete disclaimer at www.profile-financial.com/disclaimer.